Welcome to ForexTV.com. It's Monday, December 17th. I'm Remy Hookie for your New York Forex Market Buzz. In New York afternoon trade, Euro-dollar is trading at 1.4379 as of 1:10 p.m. Eastern Time. Sterling dollar is at 2.02, while dollar yen is trading at 113.21 yen. In today's U.S. data, the NAHB reported that its home builders housing market index stayed at 19 for the third consecutive month in December. Meanwhile, the Empire State Index fell sharply by 17 points in December for a reading of 10.3. New orders also fell to 14.3 from 24.5. Meanwhile, net foreign purchases of long-term U.S. securities surged in October to $114 billion versus the $15.4 billion in September, and net inflow into the U.S. was at $97.8 billion. Joining me this afternoon is Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us on this Monday afternoon.
I'm happy to be here.
Well, we're starting off the week with the dollar mostly higher, continuing to follow through on strength from the previous session. Now, the dollar broke technical levels against the euro and sterling, so let's start out by looking at euro-dollar. Greg, will we see a move back for euro-dollar back to the 1.4330 lows touched earlier today?
In the euro-dollar on Friday, we got a break of the head and shoulders formation, which has been developing for quite a while. So that is that came in around the 145.20 level, where we broke the neckline, and from that level, it's been moving down steadily since. So it looks like the trend in the euro dollar may have abated the uptrend, that is, and that with this break of the head and shoulders formation, that traders might be looking a little bit to the downside in the short term in regard to that pair. So it does look like we might be heading a little bit lower. The 100-day moving average comes in. Some targets for me in a medium-term perspective would be somewhere around the 141.67, which is a 100-day moving, and also the 50% retracement level of recent move, the last big move up. So that's sort of my target level. That level, you can't ignore the uptrend in the euro dollar over the the past year. Few years, I guess, in theory, but we have to respect that things do get overbought, and that in the short term and intermediate term, things are looking a little bit more bearish for the euro versus the dollar. So I'm kind of looking at that 141.67 level as a target. We break that lower, and then we may head to test the 140 level.
Okay, Greg, now that we've covered euro-dollar, let's move on to the sterling against the U.S. currency. From a fundamental perspective, UK data this week includes CPI tomorrow and the BOE minutes on Wednesday. In New York afternoon trade, the pound has advanced against the majors, but for the sterling against the dollar, given the recent pullback, what are technicals telling us about the forecast for the pair?
The pound against the dollar has good support at the 201.42 level. That's the 200-day moving average. We dipped a little bit below it last night, but was able to rebound back above it. There's resistance at the 202 to 202.12 level. On the upside, and that's where we were just visiting that resistance level just a second ago before the NAHB data came out. But so we're sort of in between the goalposts at the moment, trying to decide are we going to go and break longer-term moving average at the 201.42 level. If we do, then I expect that we may target below the 200 level, and around the 198.50 level is sort of my intermediate target for that currency pair. But it's still, so far we have found that support at the 201.32 level on Friday and today. So we've got to close below that level on a daily basis for it to move lower from there. Otherwise, we'll probably go through the 202.12 level work our way up toward the 203.28 level.
Okay, well, let's move on to the dollar against the Japanese currency. As we head into the end of '07, we're seeing a position squaring and profit taking, but we're also seeing a return of risk aversion, and U.S. equities are weaker in today's session. So for dollar yen, which has been seeing pressure as stocks remain in negative territory, what's your forecast for dollar yen?
Dollar yen is close to 38.2% retracement level from the move down from 124 to the lows of 107 or so. That comes in at the 113.66 level. Above that, we have the 100-day moving average comes in at 114.35. We have to get through the 113.66 level though, and we haven't been able to muster up the energy to get through that level or get really anywhere close to it at the moment. So right now, it just looks like a normal correction. You mentioned the risk aversion of the carry trades. They continue to go sideways, up and down in volatile action, or just in when I say volatile action, it may not be on today's basis, but it's just up and down, up and down, up and down, trying to squeezing the intraday traders out on the upside and on the downside, and it makes the markets very difficult. So I think we've lost a lot of players in those currency pairs. I'm talking about the sterling yen, the euro yen, the Aussie yen has been trending down, taking the money away from the players who think that the carry trades are going to be good for us still. It's not the case anymore. It's become more of a trading market on the intraday basis and less of a trending market that we saw in years prior. So all that sort of contributes to some yen, volatility. It could, we got to get through in order for things to move higher, and it's tough for the dollar yen to go higher if things like the sterling yen and the euro yen and the Aussie yen are basically under some pressure. So we got to watch the technical level, see if we can get through the 113.66 level. If not, we're probably going to waffle on, try to move our way back down to the 112.20, 112 even level, and test that area. But it's not easy out there, especially in this month, December, when a lot of people are closing up the books and calling it a year.
Okay, Greg, and last but not least, speaking of volatility, one other currency pair I'd like to take a look at is the CAD. In today's session, commodities are seeing weakness with crude under 90, COMEX gold lower, and staying under $800 an ounce. But CAD is seeing gains on the session. Do you think today's CAD strength is based more on flows than fundamental data?
Well, usually when we do see the weakness in gold and the commodities like oil, we are going to see an increase in the dollar versus Canada, and the Canada, so the dollar gets stronger and the Canada gets weaker. But we're seeing the dollar get weaker and the Canada gets stronger today. So it is kind of an anomaly, I guess, if you will. But the Canada, since hitting the lows of 90 has been sort of squeezing higher, getting above the figure, reached a high of 102.35, 30 area, and so maybe it's just a time for profit taking to take hold, and nothing works better on a profit taking trade or a squeeze than having fundamental data not support the move. So that's what tends to happen, especially in the liquid markets, and that's probably what we're seeing in the short term today. So we may go down and test the 100 level, see how it likes it at that level. It may, it sounds like a nice round number for a year-end level for the dollar Canada, and go into January, so whatever around that level, we'll figure out whether we should be at parity, below it, or above it, depending upon what the what happens in the economies, what happens to oil, what happens to gold as the the economic whirlwind continues around the globe. So I think that's what we're seeing today.
Okay, Greg, as always, thank you very much for your insight and analysis.
You're quite welcome. Thank you.
Thank you. That wraps it up for your Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.